Welcome back to the channel, everyone. Today I want to give you a massive update on the new 13F data filings, and I also want to talk about some more insider trading. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, we can see here an AMC important filing for Simplex Investments LLC. They now hold 1.522 million shares of AMC at $54 per share. They previously held around 1.505 million shares, which means they've added an additional 20,000 shares and averaged down slightly from a cost basis of $56 per share to only $54 per share. I think this is really interesting because Simplex have their average price per share for AMC at a whopping $54. They didn't average in at $8 a share or $15 a share or even $20 a share. They were buying AMC over and above $54 per share. Therefore, if a giant institution like Simplex is buying AMC at $54, $56, maybe even $60 and above per share, clearly they see AMC going higher. They've also increased their position on call options from 4.4 million call options to 4.6 million call options, so an additional 200,000 options. Now interestingly, they've also increased their position on put options from 14.2 million to 14.5 million, so an additional 300,000 put options. Clearly this part here is very indicative of can kicking because they most likely have very deep in the money call options and very deep in the money put options to execute some divorced puts. They can obviously just exercise these deep in the money calls to cover their short positions or their failed to delivers, and they're still left with and take out even more deep in the money put positions, which is obviously shown here. I think what this is basically showing is they've can kicked another 200,000 failed to delivers and taken out another 300,000 deep in the money puts, which are obviously fairly similar to shorts. But I do think it's interesting that they're holding so many shares of AMC. If they were trying to short it down, they'd just sell off their long position and continue shorting. Therefore, they must think that it is going up as well. And that's why they're holding so many shares at such a high cost basis. Clearly, smart money isn't really that smart if their average cost per share for AMC is a whopping $54. I also wanted to thank you guys massively. You've been loving the content recently, and a lot of you have already signed up with MooMoo. Because of that, MooMoo have given me a special opportunity, and I'm one of only 4 YouTubers that have been given this opportunity, all because of you guys. MooMoo's new massive promotion gives you 3 free stocks when you sign up and deposit at least $100. You get 1 free stock valued up to $350, a second free stock with a guaranteed value of $54, and a third free stock of Neo with a guaranteed value of $40, exclusively to my audience. You can always sell those 3 stocks and get 3 entirely free shares of AMC just for signing up with MooMoo and depositing at least $100. But you have to sign up soon, as this promotion is limited to the first 300 people. Now I also wanted to touch on some very important short interest data, specifically focusing on the average age of shares on loan. You may remember from one of my videos a couple weeks ago, or maybe a month ago, that I told you to really focus on the average age of shares on loan and watch how it behaves. We can see that this average age of shares on loan has been increasing massively at a basically vertical rate, and we're substantially higher, nearly twice as high as we were back in May and June. So what does it actually mean if the average age of shares on loan is going upwards? Well, it basically means that there aren't very many new short positions being taken out, and the existing short positions aren't being closed. If there were tons and tons of new short positions being taken out, then obviously the average age would fall, because obviously if the average age is say 50 or 60 or 70 days, and you take out a new short position today, that short position is going to be 1 day old and is going to greatly reduce the average. But we aren't seeing that average reduce. We're seeing that average continue to get higher and higher and higher at a very quick rate. And that basically means that the hedgies are holding all of their old short positions that they haven't covered, and they aren't taking out very many new positions. If I zoom in a little bit, we can see that they did take out some new short positions here because the average age fell when we ran up to around $45. But obviously that average age very quickly increased back upwards, meaning they weren't taking out new shorts. But what exactly is this showing? Well, it's showing that hedgies are indeed running out of ammo to add to their short positions. If they weren't, this average age would be decreasing massively, and they'd be shorting more and more and more and more every single day, and driving the AMC price back down to $20 a share or $15 a share or below $10 a share. But they don't have the ammo to continue adding to their short position, and that's why the average age is getting higher and higher and not lower and lower. And I also wanted to touch on some brilliant updates from Adam Aaron. Thursday, November 11th is Veterans Day. To honour vets, AMC will then start showing American Sniper as an AMC $5 fan favourite. The story of heroic US Navy SEAL Chris Kyle, played by Bradley Cooper. AMC will donate our Veterans Day proceeds to the Wounded Warriors Project. I think this is brilliant for two main reasons. The first reason, American Sniper is an absolutely brilliant film. If you haven't seen it, I would urge you to go and see it this Thursday on Veterans Day. And number two, I also think it's brilliant that Adam Aaron is supporting veterans because obviously they've done so much for the US and for their country. Update number two from Adam is a Twitter poll. As you know, you can now purchase AMC gift cards using cryptocurrency, and our IT group is writing code so that soon we can accept online payments in Bitcoin, Ethereum, Litecoin and Dogecoin, among others. Should we strive to take Shiba Inu as well? Now you know that I voted for yes, AMC should indeed take Shiba Inu because I do think this coin has a lot of potential going forward over the coming few weeks and the coming few months. I do also think it will bring more and more attention to AMC as well, because if they start taking Shiba Inu, there's going to be tons of media articles posted, bringing more and more awareness to the AMC movement. Now you may know that Senator Pat Toomey proposed a bill to stop the SEC from banning payment for order flow. Well guys, I've got some brilliant news for you. Senator Pat Toomey is to retire from politics in a blow to the GOP. Republican Senator Pat Toomey formally announced on Monday he will neither run for re-election nor run for governor in 2022, a major blow to Republicans' long-term plans for competing statewide in Pennsylvania. Toomey explained the curious timing of his announcement as a reaction to all of the inquiries he'd received about running for either governor's office or re-election. The two-term fiscal conservative said he decided within the past few days to bow out of politics and head to the private sector. I wonder if he's already been offered a job at Citadel and can't wait to take the job and be paid off even more. I've made a decision, it's not going to change, and I want everybody to know, Toomey said. He informed Senate Majority Leader Mitch McConnell before his announcement. And now I also wanted to talk about the Fed engaging in an insider trading cover-up that was reported by Better Markets. Now that post basically talks about this article written by Gemma Smilak. You'll notice that this article was published on October 21st, the same day that the Fed announced a ban on stock trading for senior officials, basically in order to sweep this news article under the rug. The Fed Ethics Office actually warned officials to curb unnecessary trading during bailouts, and they warned them back in March of 2020. On March 23rd last year, as the Federal Reserve took extraordinary measures to bolster the financial markets amid the outbreak of the pandemic, the central bank's ethics office in Washington sent out a warning. Officials would like to avoid unnecessary trading for a few months as the Fed dived deeper into the markets. The ethics unit of the Board of Governors suggested in an email, a message passed on to regional bank governors by their own ethics officials. But the recommendation, confirmed by a person who saw the email, didn't go far enough to prevent a trade scandal now engulfing the Fed and being used against its chairman. The email could cause trouble for the Fed, which declined to provide a copy of the email because it shows central bank ethics officials, and officials in general, being aware that active trading looks bad. They obviously completely ignored this warning and ignored the advice by the Ethics Committee and decided to sell all of their personal stocks back in March. We know about Robert Kaplan selling millions of stocks back in March of 2020, and also Eric Rosengren selling all of his stocks as well. But one that you might not know about is Senator Richard Burr, who had material non-public information regarding the pandemic economic impact. After Burr dumped his stock, he called his brother-in-law, and his brother-in-law called his stockbroker the very next minute. After Senator Richard Burr of North Carolina dumped more than $1.6 million in stocks in February 2020, a week before the pandemic market crash, he called his brother-in-law, according to a new Securities and Exchange Commission filing. They talked for only 50 seconds, and the very next minute, his brother-in-law, Gerald Fulth, called his broker. And his brother-in-law, a Trump appointee, sold between $97,000 and $280,000 worth of stock. I do think it's awful that so much insider trading does go on between senior officials, and that's why I'm so glad we've managed to bring so much attention to this problem. This is that article where the Fed banned senior officials from trading shares in the wake of the ethics scandal, which also obviously was posted on the 21st of October. Clearly the Fed had been trying to cover it up and brush it under the carpet, but I'm glad we brought so much attention to it and that senior officials are now banned from active trading. Guys, be sure to let me know down in the comments below what you think about the new 13F data update for Simplex Investments, and also what you think about insider trading. And also do be sure to sign up to MooMoo using my link in the description below to get those 3 free stocks with a guaranteed value of pretty much $100. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!